Hello guys, welcome back to AWMFX. Good morning, good afternoon, good evening, or good night, no matter where you are. So today I'm going to make a video about how does the price move using the supply and demand concept. Right? It's actually very easy to understand. But let's start. All right. So here I have a range of price. Okay, I have a range of price. So it's between $1 and then the higher end and the lower end. So what happened is that we'll make a story about this. All right, we'll have a story about this. So if I'm gonna tell you that the big players, or should I say the bankers or institutional traders, are able to see our order, do you believe that? Do you believe that it's true? Actually, it's true. They have the ability to see our order. Even ourselves, honestly, ourselves, we have a thing we call it as the order book flow. Okay, if you search it at the Googles, that is a thing we call order book flow, or example, Wanda order book. All right, so image. So if you look at it, actually, you will notice that there is a there is a thing we call order flow. Okay, particularly we know that at which area there is a lot of order. All right, the range, how many percent, all right, how many is going short and how many is going long. So imagine that you are an institutional trader, you want a more assured data, so you will pay for it more and then you get more accurate data than the normal order book, right? Then now let's assume we are making a story over here. This is just an example, all right? Just an example. So what happens is that now this institute, maybe let's assume some bank, big bank, I'm not going to mention name. He wanted to the big banker, I put it big banker, buy order 10 mil. All right, so now let's give an example over here. The big banker have buy order 10 mil. So how is this big bankers gonna get their money from? All right, you have to know one thing. Forex is a zero-sum game. They need to get the money from somewhere. So what happens is that the big players, they know our orders, our retail small orders. Some of us, we are using the support and resistance theory. Some of us, we are using the breakout theories. Some of us, even we are using the indicators. I don't care, it's the Bollinger Band, moving average, all these things. So they are able to know where is our order and our stop loss. Okay, so what happens is that, example over here, he want to gain a 10 million because he got a 10 million order. What he'll do is that first thing he'll do is that let me change the color to green. All right, okay, so what happens is that the price, the bank will definitely push the price up. All right, so the first stage is that they'll push it to this currency 1.001. all right, and consume the 2 million over here because he know that there is a 2 million sell order at this point. So what happens is that he'll push it up and then consume this 2 million first, and left the money left is 8 million right now, correct? So 10 minus 2, that is 8 million right now. Then that is not enough. This is not enough. So what happens is that the bank will push the price higher again, okay, and consume the next level. So what happens left is that there is 5 million left. 5 million left. All right, so they have 5 million left. Still not enough for them to get their profit. All right, so what happens is that they'll push the price again, okay, to the next level, okay, and after minus, there is 1 million left. 1 million left. Right? So 5 minus 4, there is 1 million left. Understand this theory first? So that is not enough. Then what happens that it will push the price somewhere around here, all right, or maybe to this point, and consume the 5 million. But this time, the big players had already had their orders filled, all right, and they are already take their profit, and then they are gone from there. So what happens is that the price now is negative 4 million. Negative 4 million. All right, because 1 minus 5 is negative 4 million. All right, so the big players already took their profit and then closed their buy trades. So what happened next is that what you see usually in the market, the price will drop very fast. This is one of the reasons why and how the price move. So a lot of you do not understand this theory, do not understand this concept. It's because the big players are able to see our order. Of course, right now, what I'm going to tell you is that this is a small number. Really, 10 million, 5 million, 2 million, this is all very, very small numbers. So imagine in the real world, the real Forex world, is we are talking about trillions of dollars moving in and out every day. So that is how the price move. So let's come back to the chart, okay, and then you just see example over here. So I'm going to give you an example, a very simple example. So assuming that the price, okay, that is why we need to mark our supply and demand out. So this is another education on marking. So first of all, we must identify our supply zone. So this is our supply zone. So it ended here because the price consumed the order. All right, it consumed the order at this point. That's why it ended over here. And the next time when the price, sorry for that, and next time when the price move, okay, it will move very fast because there is no more order left. All right, so if you look at it properly, here is another supply zone. Okay, and when you pull it at the back, you can see that it reacts twice. Reason is that maybe the first time the price consumed, not completely consumed. Then the second time, once it's consumed, the price move up very fast, swiftly. All right. So if you keep doing this thing, you will know, you will understand how does the price move. Okay, the price really move accordingly, not because of how should I say, not because the price move as it is, okay, randomly. No, it is because they have supply and demand zone. All right, so this is the supply zone left. Then we talk about demand zone next. So you look at it, I'm gonna tell you where's the demand zone. This is the demand zone. So the price really react exactly at this area. All right, price react exactly. If you can see properly, even this a simple movement, you can see that the price is really reacting to this kind of zone very well. A lot of you do not know and don't understand how come the price suddenly break or suddenly reverse at this point. That is a reason, right? You might be thinking about support and resistance. I don't think you can find any support resistance over here except for this particular point, right? So if you look at the zone, there is a lot of reason why the price suddenly reverse at this point, and then how come at this point it goes up? Because there is a demand zone. You see, so it's very obvious. This is how does the price move, right? In this simple example, using the concept of order consumption. All right, so hopefully you guys understand. I hope that I don't make things too complicated for you. All right, so hopefully you guys pick up a few tricks or tips on the price movement. So see you guys next time. Hopefully you enjoy. Please like and subscribe. So bye.